Hello and welcome everyone to Are You on the Hook for Communications Taxes? Simplify compliance to scale your business. My name is Regina and I'll be your host for today's webinar. Today we'll be covering identifying hidden compliance risks, scaling with confidence, implementing proactive compliance strategies, leveraging automation to save time and resources. Before we dive in, just a couple of housekeeping items. Just a friendly reminder that Avalara cannot provide legal tax advice, but we will answer as best we can. On your screen is our safe harbor policy. Please take a moment to review while I continue with some additional housekeeping. We are recording today's event, so if you'd like to listen to it again or share it with a colleague, you'll receive the recording within the next 24 hours. The console you're looking at can be customized. Feel free to move or resize the windows. Slides can be resized by dragging the bottom corner or by downloading the PDF slide deck under Additional Resources. The Additional Resources section contains related resources, including the slide deck. There are several ways to engage with presenters and attendees. If you have any questions, please submit them using the Ask a Question box. We will try to save time at the end for the Q&A. You may also submit webinar troubleshooting questions in that box. You can join our attendee chat by clicking the icon at the bottom of your screen with two chat bubbles. The attendee chat will then appear. We encourage you to introduce yourself, network, and discuss today's topic. You can react to the presentation by clicking on the emoji icon and reacting. If you have any technical issues, there's a question mark button or icon at the bottom, or reach out to us using the Ask a Question box. We're offering 1 CPE credit for today's presentation. For those looking to receive CPE credit today, please note that we will ask you to respond to 3 of our 4 poll questions. The poll question will pop up on your screen for a limited amount of time, so please make sure you're ready to answer when the question appears. Please do not split or tile screens on your computer, as this can affect the placement of the poll question. The webinar platform may not render correctly on mobile, so please try to get to a desktop. You must also attend the full 50-minute duration. Once you have met the CPE requirements, your certificate will be available to download in the Earn Certification box on your screen. Click the icon to access. It will open up in a new tab. Your certificate will also be sent in a post-event email. Unfortunately, we are unable to provide CPE credit to those who have technology issues that prevent them from qualifying. If you do experience an issue, please reach out as soon as possible so we can document the issue. If you have a moment, please respond to the survey questions on your screen or following the webinar. Now let's meet our presenters. First, Toby Barger, Senior Tax Strategist at Avalara. Toby, please tell us a little bit about yourself.
Yeah, this is Toby Barger. I've been with the communications business at Avalara, working in the area of communications tax for going on 25 years now. I'm an attorney by background. And I work helping people figure out the complex solutions of how to fix their communications tax problems.
All right, thank you. And Chris Brown, CTO of Logisense Corporation. Chris, tell us a little bit about yourself.
Hi everyone, Chris Brown, CTO of Logisense. I've been experiencing 25 years in the software industry, similar to Toby, focused on billing related aspects and the high integration with taxation, as well as in the communication space, which we'll be talking about today.
All right, thank you both. That's all I have for housekeeping, so I'm going to pass it over to Toby to get us started.
Yes, just the high overview of what we're hoping to talk about today. I want to talk a lot about how communications services and by extension their taxes are kind of creeping into areas where they maybe haven't been before. So into new industries, into new types of product offerings, places where historically, you maybe didn't have to worry about some of this stuff, and now it's there. And so we'll talk a little bit about how that's happening, and maybe it affects you and your business in some way as well. And then we'll get into a little bit about what some of the implications of that are, right? So you may have heard communications tax is hard, and in fact, I'd make the argument that communications tax, especially here in North America, is maybe the hardest transaction tax compliance requirement there is. Well, why is that? What makes that such a challenge, and what are the things you got to worry about and some of the pitfalls if this is something that you're kind of newly finding yourself having to dig into? And with that, now that you know that it's out there and that it's kind of complicated, what can you do to make sure that you're prepared for that? How can you automate that and make it a little easier and avoid some of the problems that can arise with you having to try and make that work within your existing systems. And hopefully we'll have a little time at the end to answer your questions. And I think that's going to take us to our first poll question, Regina.
Okay. Thanks, Toby. It's time for our first CPE poll question. Do you automate tax calculation or compliance? And that should be popping up on your screen now. You can choose from yes, tax calculations only, yes, returns only, yes to both, or no. As we do have a lot to get through today, we will most likely not have time to review the results, but we will be collecting those. All right, I'm going to pass it back to continue with the presentation.
Yeah, so I want to give a little bit of background about, communications taxes, what they're all about and where they kind of come into play into this conversation. There's a variety of different services that are potentially, likely to trigger communications tax events. And there's sort of the traditional communication services that we're probably most familiar with, telephone service, including voice over IP telephone service or traditional wired telephone service, cell phone services, cable television, satellite television. These are all things that are kind of relatively what I'd call the traditional communications market. And there's, long established kind of track record of communications taxes that apply to those types of services. There's some other things that have kind of extended out from that, though, that are kind of a representative of the theme of a lot of where we're going today and the fact that this is migrating into new and sort of different places. So a lot of various collaboration tools also potentially bring up communications taxes. So when you move into things like Zoom and other web conferencing platforms, more contemporary, over-the-top unified communication solutions of some sort, those sorts of things also bring in a lot of the same taxes that we saw in the more traditional communications market, and you'll kind of get an overview of what kind of taxes we're talking about here as we progress. Also, kind of a wider world of what I would call the technology universe, right? So not just communications services directly, but things sort of adjacent to it. So things like cloud computing, web hosting, software hosting, various managed technology services, software as a service. These are all things that are somewhat adjacent to the communications world and were frequently sold by communications companies or some of the same companies that sold communication services. And they now may also include directly communications, and we'll talk a little bit about how that can happen as we progress, how you could get from being a technology company to becoming a phone company, whether you intended to or not. And then kind of the sort of final silo, if you will, there would be networking type of services. So, if you have private networks, whether they be traditional wired private networks, whether it be a cloud network of some sort of software-defined networking, these types of services are things that we kind of take for granted that it's just sort of happening in the background of our lives. But a lot of people don't realize that there's a lot of communications tax involved in the provision and operation of some of these services. So to that point, we're going to talk a little bit about how this is proliferating into some new market areas, right? And it comes in several different ways, but the kind of three highlighted ones that we want to talk about and focus on today are the sort of explosion of API-based communications, right? So there's a lot of technologies out there now where you can take either voice or a SMS type of a solution, typically is what we're talking about, and plug it into any sort of various application, whether it be a mobile app or whether it be a desktop software application or much of any other technology solution. There's a lot of companies out there now that provide basically VoIP or SMS as a plug-in to include in other products and solutions, right? And that, of course, has triggered a explosion of the number of companies that are potentially involved in selling communication services. Streaming is another one that oftentimes gets a lot of attention these days. That we've got the streaming platforms that we're all familiar with, the Hulus and the Disneys and Netflixes and that sort of thing. But there's now streaming solutions for all sorts of other niche and productivity-based items and learning and educational content and different variations on that sort of theme that can wind up also triggering a lot of the same sort of taxation questions that we wind up with in the traditional entertainment communications market that we think about. And then lastly, there's kind of a creep into the world of hardware manufacturing, right? We think about consumer electronics and devices and industrial electronic devices and that sort of thing, that these manufacturing companies, we don't necessarily normally think about them as being communications companies, but now that they have a kind of a motivational drive to include connectivity, IoT stands for Internet of Things connectivity, to various devices, whether it's a doorbell or a oil well monitor or fleet management solution, whatever the case may be, they all require sort of a network connectivity to provide some of the core functionality that a lot of these hardware solutions now feature. And that also potentially triggers a situation where you have companies that weren't necessarily traditionally what you'd think of as a communications company, but now find themselves having to consider whether or not they're subject to some of this stuff. And I think, Chris, you might have some specific customer thoughts on how that looks out from your experience there at LogicSense.
Yeah, and from what we see with the customers that we deal with, most of these customers are global in nature, and the tax rules change across every country or region that you work within. One of the biggest things that we talk to our customer base about is, do you have the right data to make some of these decisions to help guide where you're going in the future? It's not as simple as, hey, I have a product and I sell it. I need to know what it's doing, how it's consuming it, where it's consuming it. And collecting that type of usage, whether it's the API-based communications or from IoT devices, is highly important. And being able to do that with large scale is something that Avalara can help with. Also, specifically, when we look at the IoT devices, we do see people that offer connectivity versus actual devices and hardware and solutions have two different viewpoints. Some may say I'm just providing the pipe, and some say I'm providing the end service to the user. There's a little bit of gray area in there as to what's actually happening and the types of events and messages that are going on. So those are some things we'll dive a little bit deeper into as we go.
Absolutely. Yeah. So I wanted to talk a little bit about some of the API-based communication solutions. I mentioned that you've got some companies out there now that provide these API hooks that you can build into your app or into your software platform. You think about, for example, you order the Uber and you have the ability to, call the driver can call you, or there's an ability to text them, or your pizza delivery man, that sort of thing, that you might be able to communicate where to drop off the delivery, that sort of thing. And so there's a real question mark there, right? So I've got this platform that was defined for a purpose, getting a ride share, delivering a pizza, that sort of thing. And now I've built into it, phone calling or text messaging through, not your actual cell phone, but through usually a VoIP connection in the background that's going to, facilitate these conversations between the parties. There's a real question mark there as to whether or not that represents a communication service. There's similarly, using kind of the same technology, some other platforms that I would call your attention to that also have a lot of the same functionality, but maybe a little different use case, right? So we see some other platforms designed for maybe like a medical or dental office practice management, or managing trades contractors, if you've got a plumber or an electrician or something along those lines, that are basically platforms that also are plugged in to deal with, sending texts or phone calls to, third party, the end user, the customer of the doctor's office or the plumber or whatever the case may be, to remind them about appointments or schedule appointments, or let them know that the electrician's down the block and approaching, that sort of thing. And these use the same technology, right? It's the same API type of solution that's plugging into like the back end of a pizza delivery app or a potential ride delivery, something along those lines. And there's an open question mark then of whether or not that constitutes selling a phone service, right? Because there's potentially a lot of pretty distinct tax implications that come out of that. You're not necessarily talking about just sales tax now. If you do have an API that provides communication services, you're potentially talking about a whole range of other stuff that we're going to talk about, regulatory obligations and things with the FCC and communication services taxes and that sort of thing. So by connecting and using these APIs, does that constitute a situation where you're selling phone services? And I think there's kind of two really distinct categories here. And most of the time when I talk to people that are using these types of services or implementing these types of services, it tends to pretty clearly fall on one side or the other, right? And I kind of group these together in the slide that you've got a distinction here, right? So the pizza delivery and the ride delivery, the distinction there is that the true object that you're offering, that you're selling to the customer in that instance, is a pizza, right, or a ride, not the phone call. You're not advertising the fact that you're able to chat with the driver or communicate where they should pick you up or anything like that. I mean, that's a feature, but it's not the driving thing that somebody's buying. It's not the truck. It's just kind of facilitating those interactions. And so if I'm Domino's Pizza or Uber or whoever is implementing those kind of API solutions, I think it's pretty easy to say that the communications implementation there, I'm consuming that, becomes a consumed part of my offering. It's not something I'm really kind of reselling as part of the bigger product offering. In contrast, some of those other solutions, if it's the doctor's office or the dentist's office or the plumber or whatever else, and I've got this platform that I'm selling to these. Maybe I have a web-based platform that I am offering to these types of vendors using the same technology that we just talked about in the other group of items. But here, it's much harder to make that case that the communications part isn't the kind of true element of what it is that you're offering, right? Because a pretty important function of the advertising there is, hey, this is going to allow you to stay in contact with your patients or with your customers and facilitate all these contacts. The communication is kind of the driving force of what it is that you're trying to offer in those instances. And it would be kind of hard to, under some sort of scrutiny from the tax authorities, to argue that the communications isn't kind of the point of the thing that you're selling. And sure, it probably does some other stuff. You probably implemented this in the context of offering some other, back office management or business management and that sort of thing, other customer contact solutions. But that has become a core, function of what you're selling, is the fact that it can handle those communications. And so if you do find yourself in one of these scenarios where you're selling these API-based communications or you're implementing it and you're kind of on the fence about whether or not that's something you need to worry about, that's the sort of question mark I'd be asking is which of these circles do you fit yourself closer within? Are you closer to the, this is just sort of an ancillary addition to a bigger product offering that really doesn't necessarily involve the communication aspect, or is the communication aspect the point? Driving into a little bit of some conversation about some of the different functionalities as to where that could come up. Sometimes that might wind up in an outbound marketing type of a situation, contact centers, notifications and alerts about, as I said, like upcoming appointments, or potentially winding up with the ability to schedule that you're due for an appointment with your dentist or with your plumber or something along those lines. Those all require potentially voice connections, SMS connections. There's certain tax implication that flows out of that. On the IoT side, as we mentioned there, you're generally looking at data and wireless as the potential direction of that.
And Toby, just to add one thing on that last one too.
Yeah.
What's complicating things a little bit more that we see from the software side is, as people are building up these solutions and relying on AI even more, it's going at a pace where the customer doesn't really know how they're interacting, and the service provider doesn't know how they're interacting too, and it adds a little bit more cloud to the mix. So we really have to be able to look through what the whole end-to-end process is. And we'll talk a little bit about more some of those specifics in the next few slides.
Absolutely. Yeah, well, and we're talking about companies that probably weren't necessarily in the historic, sense having to ever worry about some of this stuff as well, which adds an extra onus of concern with it. And so with that, I want to talk a little bit about what makes communication tax so hard. I alluded to this at the outset that, there's a strong case to be made that North American communications tax is maybe the most onerous of the indirect tax, items that are out there. I think our folks, friends over in the motor fuel or, some of the other specialized business units of Avalara might have some concern about whether or not it's as high of a rate. Our rates may not be quite as high, but in terms of the complexity of how you have to get there, the type of math and some of what all's involved there, there's a lot that goes on. And so why, if you're not somebody who's had to deal with this before, why is it so scary? Well, one of the things that is kind of inherent to the complexity is the fact that with communication services, it's pretty common that you can wind up with multiple taxes on the same service, right? So we're used to a lot of other transactions. You've got sales tax, or you've got VAT or GST or something along those lines, but it's usually just one tax. Maybe you've got multiple levels of sales tax, something along those lines. But with communication services, it's not uncommon that you might have 5, 6, 7, 8 or more taxes, depending upon what it is and where you're selling it, right? And it's really actually kind of more of a mixture of, it's not just pure taxes, but you got regulatory fees and various economic activity taxes and a bunch of other things that wind up kind of accumulating there. And then the other thing that makes it a little tricky is there's a lot of variation in how different sorts of communication services are taxed, not just at kind of the high level, as in terms of like cellular is taxed differently than cable is taxed differently than landline, but even within that, like if you think about like a cell phone bundle and you've got a talk, text, and data plan, for example, there's actually probably several other things going on in that bundle besides just talk, text, and data. But just keeping it simple there, those three elements all have really different, distinct tax outcomes. And so you've got a mixture of the stuff on the bill is all going to kind of have a different choice of items off of the a la carte menu that they wind up getting applied to them. You've got different tax calculations that come into play for different types of buyers and different types of sellers. What the regulatory status is of the communications company. Is it state regulated, federal regulated? Drives to different tax outcomes. Different types of buyers. Is it a residential consumer buyer, or is this a business-to-business type of a transaction? There can be different scenarios for subsidized customers that might qualify for certain types of stuff. The situsing of communication services is kind of tricky. Inherently, you've got transactions with communication services that are being accessed in potentially multiple jurisdictions, right? Just a classic phone call, is usually between two different places, right? And you might pay for it in a third place, and you might stream stuff depending upon where you're traveling to. I'm on vacation and I'm gonna download a movie. Does that mean that I'm taxed where I download it or where I pay for it, or what's going on? So there's a lot of different rules with that. Cell phone services, you drive all over the place, make calls in different locations, and so you have to keep track of all of that. The fact that there's different kind of rules for different market verticals is an additional headache.
Toby, just to kind of go back one more time on that, just to give the perspective of kind of what happens when companies are implementing this. The data is really important for all of those slides. The ability to understand if you are a B2B type of customer, you're selling to other enterprises, you have wholesale services, does your data represent that differently? Yep. Same thing on the first point there, you have multiple services. How do you break those things down? There's different geographical regions. Always think about your data and what you have access to, and is there enough information to make some of these complex decisions that can be done through Avalara?
Yeah, and that's another one that comes up quite a bit. If you're billing for enterprise level buyers, does your billing system have location information for business subsites where they might be receiving service? And for certain communications products, that's going to be really important, right? And there's some limitations that not all billing and payment systems track more than one location for customer. It can get messy, so this is definitely things to dig into.
Yeah.
So some other things that can make things a little messy with the calculation itself, right, is the math can sometimes be a little bit more complicated. We're used to in the sales tax world, I've got the purchase price times the tax rate equals the tax amount, right? Well, with communications taxes, there's potentially some other things that you have to worry about there, right? So it's not uncommon that some of these taxes may have caps or tiers or thresholds. So that can look different in different situations, right? But you might have a tax that doesn't kick in until you hit a certain dollar amount, or it drops off after a certain dollar amount, or maybe there's tiered rate structure. The more the person buys, you have that in some areas of the communications world. The other thing that potentially makes some of these complicated from a math perspective is, as I mentioned, there's a mixture of taxes and fees and surcharges on a bill, and it's not uncommon that the taxes will need to tax the fees and the surcharges, and sometimes the items will need to actually tax themselves, and there's a few things out there that need to tax themselves repetitively. There can be some tricky presentation requirements. This is another one where that connection with your billing platform is really important, right? Is that you've got some requirements in some jurisdictions that you need to present the tax in a certain way. That may mean that it needs to be under a particular header on the bill. It may mean that you need to use some specific language. Some of these items you can use kind of a generic description for it, but others they may require that you need to print out, like San Leandro emergency management fee for what example out on the invoice. And so making sure that you have a billing and payment system that can both work with that and your tax engine to make sure that you're getting the right information on that.
And one thing, Toby, I think that all of these things encompass, and you said your billing platform can do the right things here and integrate in with like a tax vendor like Avalara, automation. If you look at how complex all of these things are, all the things Toby just went through, if you can't automate this process, it's never going to be successful, right? So you need to be able to looking from the data collection all the way through to the math, the presentation, and the reporting afterwards. Make sure you can automate all of those things.
Absolutely, yeah. So what are these taxes, right? That's the other sort of $1 million question, right? And I could probably spend all day going into the background of all these taxes, but I don't think we're going to have time on that. But at a high level, I kind of would divide most of the communications taxes and fees into two general categories, right? There's one set of things that we have to deal with that are taxes and fees that are assessed on the buyer and then typically get passed on as a surcharge to the customer, right? And within that group, you're going to have various types of regulatory fees. The big one, the Federal Universal Service Charge that the FCC charges, that's been over 30% for the last several years. Programs for relay services and lifeline programs and other public benefit programs. These all have charges that get assessed on various types of communications revenues that then oftentimes wind up getting passed on to the consumer. And then there's a whole other class of taxes and fees that are things that directly and legally are imposed on the communications buyer, right? So sales tax, excise tax, utility users tax, 911 charges. If you have something that's subject to 911, that's usually a direct imposition on the buyer. So these are, as I said, it winds up within the tax engine. We've got, hundreds and hundreds of different categories, but they generally kind of can be boiled down to at a higher level these highlights.
All right, it's time for our second CPE poll question. Are you currently collecting and remitting communications taxes? That'll pop up on your screen now. You can choose from yes, no, and don't anticipate we will, no, but believe we may need to soon. All right, that'll remain on your screen, and I'm going to pass it back to our presenters.
Thank you, Regina. Yep. So I want to talk a little bit about some of the tax implications specific to certain ones of the markets that we've talked about, right? So we talked about the API communications and VoIP services in general. VoIP can be a little bit of a messy world in general for taxation because there's a lot of different flavors of VoIP. There's different types of product offerings out there. Yes, there's some stuff that's fairly standardized, but there's still a lot of folks out there that are coming up with new ways of packaging or offering VoIP services. There's kind of 2 or 3 main categories of VoIP for tax purposes, though, things that we would think that you'd need to, at least consider as to which category you fall into. And the big one, is probably the distinction between whether or not it's interconnected or non-interconnected, right? Does the service allow you to make and receive calls off the public switch telephone network? Can I dial people's cell phones or landline numbers or businesses and that sort of thing? That would be an interconnected service versus a non-interconnected service might be like a Zoom to Zoom call or we would have thought Skype to Skype back when Skype was around. That would have been another example of a non-interconnected VoIP solution. There's different tax for sure. Neither is non-taxable, but interconnected definitely carries a little bit more tax than non-interconnected. And then whether or not it's nomadic or not, right? Can the customer move the VoIP service around and use it in different places? Now, obviously, if it's like an app-based solution, it's something they're going to access on their mobile phone or their laptop or some other software that is inherently portable, then that's pretty clearly going to be nomadic. But there are some non-nomadic VoIP products still out there in the market when you have more traditional office phone systems and that sort of thing that maybe isn't going anywhere. There's some different tax that potentially comes out of that. Almost all VoIP services are typically going to be a bundle, and we're going to talk a little bit about some of why bundling can be tricky and how you have to kind of be prepared for that coming up with that. Location sourcing is a potential headache here right now. As I mentioned, you've probably got either nomadic users that are moving around and using it in different locations, or a fixed location. Probably the most painful, though, is when you have both, right? You might have an enterprise that you're billing, and they've got some, in-office employees that are on maybe a desk phone or a non-nomadic solution of some sort, and then also maybe some remote users that are on a nomadic solution. And so you may need to be able to account for both of those in your billing implementation. And then another thing that is somewhat specific to VoIP services, but a real important call out, because this is an extra headache, is that you've got certain items that apply on a per line per month basis, right? And 911 fees are probably the most common thing associated with that. Most VoIP services tend to be subject to 911 charges, 988 charges, poison control, some state telecom relay items. The tricky thing here is that in order for this to get applied properly, you need to be able to track how many quote unquote phone lines it is that you're selling to your customer. And in order to do that, you're going to have a billing system that has the facilities within there to store that information at the customer level and be able to pass it to your tax automation engine. So, that's a frequent pain point with a lot of these implementations, but something that the folks at LogicSense have definitely solved for.
Yeah, Toby, I think during all of these considerations, no matter what line of business that you're in, and some of the things that we've talked about in the standard areas for communications taxes today, what we do find is there's lots of discussion and planning early on, right? You need to make sure you have access to data, as I said before. You need to have consultations with the team at Avalara. You need to have consultations with your legal team. You need to understand your business, where you operate. And a lot of those decisions are going to change product by product and use by use, right? And you need to be ready for all of those combinations. So, plan ahead, plan smartly into those things, research what your opportunities are, and stay on top of them, right? And as you'll probably talk about next, Toby, what's coming next in streaming, it's going to add even more challenges to the plate.
Exactly, yeah. So with streaming, there's an interesting dichotomy there, right? The streaming is this kind of usually fully over the top type of solution, which at least initially a lot of people I think thought was going to lead to entirely a sales and use tax type of an outcome. But we've seen that there's several states that have read into their existing statutes definition of cable television or pay television, things along those lines, streaming services, right? And so we have some taxes beyond sales and use tax that potentially apply to, whether it's audio streaming or video streaming. Video tends to be the bigger conversation point. But, Florida Communication Services tax, Kentucky Utility tax, Chicago amusement tax, a few other items that are things that are, legacies from the cable and satellite world, were basically amounts to these were states that had fairly loose interpretations of what constituted pay TV, or the definition anyway was fairly loose, and it allowed them to read streaming into it. Eventually, I think we'll probably see a wave of more states that will modify definitions to include, streaming, into their cable television taxation regime in other places, right? But it's enough now that if you are selling a streaming solution, you probably need to at least make sure you have something in place that can deal with, Florida and Kentucky and a few of the other places where this is a prop-up item. There's a bunch of other litigation out there about some other potential taxes, franchise fees, and that sort of thing that they're attempting to get imposed on streaming services. As I said at the outset, we think of streaming in the context of Netflix or Hulu or Disney or something along those lines. But there's a lot of other stuff out there, for streaming, whether it's platforms that are broadcasting, youth sports, or platforms that are broadcasting potentially educational content, or edutainment sometimes. There's a lot of other, sort of potential edge cases there, religious programming. Long story short is that unless it's covered by some other sort of exemption, you're probably winding up underneath of the streaming tax regime and maybe getting pulled into some taxes that you hadn't planned for or intended for.
And one thing on that last note you had there, Toby, we've seen some customers in our space that are getting into private streaming. It's the content coming from one location into another to then be turned into one of those streaming services back to an end consumer. And where does that fit in between, right? Because it's the same type of activity going on amongst that whole pipeline. So it's another thing with lots of questions and lots of people keeping their eyes open as to what's going to happen.
Yeah, and the education one really kind of is the one that really gets me curious. And I don't think there's a great resolution in very many states, in the sense that you've got a really wide spectrum there, right? There is some, quote unquote educational content that is online and streamed now that is really pretty much purely entertainment, right? It's not a lot different than what we'd have watched on like the History Channel or something like that on cable. And then at the other end of the extreme, there's, like full on, certified degree programs or whatever that are online, fully streamed sort of content. But there's a ton of stuff in the middle, right? And it's like, where exactly does that tax line between, entertainment pay TV and something that's an actual genuine, education offering fall? And, I've seen a lot of folks that have kind of struggled with coming up with answers with that. And unfortunately, it's something that doesn't really have a lot of great definition. But once again, here's just kind of a quick review of some of the states that I highlighted that have existing communications taxes, things beyond just the sales tax that applied. And there's been several other states that have looked at adding either a specific streaming tax or digital goods tax, something along those lines.
Yeah, I think, Toby, this is one of the other areas that I think you and I could both talk forever on, or have our own webinar just on this one slide. So it's really interesting to share some insights on this, but I'll let you kind of kick things off.
Yeah, so these are all kind of highlighting some things that have a little, I'd say a little extra when it comes to communications taxes, right? I don't think any of these things are, foreign concepts necessarily to folks who've been dealing with maybe sales and use tax. Everybody's got bundled goods and everybody's got exemption issues, and everybody has to deal with geographic situsing. That's not necessarily anything new, but all these things take on some extra layers of hard when we're talking about with Comtact, right? So we already spent a little bit of and teased the bundling issue a little bit at the outset, right? That you've got this need to potentially account for the fact that you've got this package that has a bunch of diverse things included in it that have different tax outcomes, and how can you justify that and get the right mix and breakdown of what the proportionality is for tax. And generally with communication services, the jurisdictions will allow you to tax on an unbundled basis as long as you have, books and records documentation of the bundled contents, and you can kind of support your position on all of that. Exemptions, kind of the extra little bit of a headache there, if you will, is the fact that, we've got multiple taxes, right? And so it's one thing somebody furnishes you a, sales and use tax certificate, but, do you also shut off their communication services tax? What about their 911? What about the regulatory surcharges that you are passing on? There's kind of a lot that goes into some of that decision making that makes it a little messier than just what we're used to in the sales and use tax world. And then the geography, one of the things that's inherently complicated with a lot of these communication services is that a lot of them are designed such that, they are over-the-top services now, and that means that you flick a switch and you could conceivably be selling this thing tomorrow in like 190 countries or whatever, right? And there's probably some of those places where legally maybe you shouldn't be selling anything to in the first place, or processing payments is going to be a legal problem. So you do probably want to look at some of those details, but it creates an extra degree of headache, right? I'm been doing this long enough. I remember the communication space where usually if you started selling a communication service, it was going to kind of follow the footpath of you were building out network and building out, phone lines and, fiber and that sort of thing. And so there was kind of a slow and deliberate growth pattern to that, right? Versus, if they're selling streaming or an over-the-top, voice solution or something along those lines, you could wake up tomorrow and be nationwide and maybe in many, many countries. And so you got to make sure you're prepared for all of that. And then the filing, that's another thing that, once again, none of you, if you've come from the sales and use world, are, unfamiliar with the idea of tax filing. What may be unique here, if you add communications taxes to your world, is the fact that you're now going to have to also worry about forms for all these other taxes as well, right? And there's some places where that might significantly magnify the proportions, right? A lot of the 911 charges, for example, are all still filed to local jurisdictions. So if you're selling that nationwide, you could wind up with thousands of 911 returns alone. So that is a whole other additional layer of hard.
No, I think one thing to add on, in the customers that Logistance deals with, they cover all of these topics. So what makes it really interesting for me is on the bundling side, when, a customer comes to you and says, I want to look at bundling, but I sell in 5 different jurisdictions and I need the bundles to be different, but I want to have one product. And how can I do all of these things to build up all these rules? And I know we're going to dive into this in the next slide, but it's a common conversation. I would say we probably have maybe about 30% of the time when we're dealing with tax questions between the customer, with Avalara, and ourselves. It's what is the right bundling solution for us? How do we work with that? And then if I do have a product that has something like an add-on or an opt-into process, how does it change? So why don't we talk a little bit about bundling then, Toby?
Yeah, well, bundling is it's something that's evolved a lot since I've been in this space, right? There's kind of always been communications bundles, at least as long as I've been alive, but they've evolved a lot, and it used to be that you might buy like a triple play bundle or, talk, text, and data bundle, or, just a VoIP seat. If you think about that, that's technically a bundle. It used to be that you buy these things and you sign up that I'm buying the package, but then the bill would arrive and you'd get, all this detail. I'd have, 4 or 5 pages of, here's all of the charges associated with the talk, and here's all the charges associated with the text, and here's all the charges associated with the data, and you have separate price points displayed and all that sort of thing. So when the bill showed up, it wasn't really a bundle anymore. And for a lot of reasons, people don't generally want to do that. I mean, that was great from a tax perspective, right? Because when you showed all that detail and you had the price points for all the individual components on the invoice, it really didn't change anything for tax, right? But nowadays, not very many people want to do it that way for a variety of reasons. You want cleaner bills, you want simpler bills. Nobody wants to list out everything that's on the bundle anymore because there's a fear that, if people see what all's in there, they might decide there's something they don't need. And next thing you know, they're canceling some component of their service or asking for a reduction or something along those. So there's a lot of reasons for that. And so the question mark then comes up of, well, how do I do that, right? And so if you've got good tax automation, good billing automation, hopefully that's fairly painless in terms of the technical aspects, right? The actual passing the information to get the different tax treatments on the different proportions, that can all be automated if you've got a good solution. The tricky part is coming up with the values, right? As a tax professional, that's always the thing that I get the most questions about is, what do I have as a reasonable price for this particular element? How much should I say is voice, and how much should I say is data, and how much should I say is text, or whatever else may be going on in your bundle? And ideally, you'd like to have like a la carte prices you could point to for all of that, right? And if I could say that, these, 5 things purchased individually would cost X, Y, and Z, and you put them together in this package, and it's, 10% cheaper because they got it in a package, but you can see that it's all nice and proportional. then that's probably a good position to be in under scrutiny. But the headache there is a lot of people don't offer everything that's in their bundle a la carte anymore. People are trying to keep it simple, and so you may not offer all of these little pieces on their own, and so you might not have an a la carte price. And that's where things can get a little tricky. I don't know if you guys see very many of those questions on the Logicent side, but I know that's where we get a lot of questions: is how do I figure out what's a fair thing to call it from a price perspective?
Yeah, and I get that from two perspectives, right? So if we look at what the images that we're sharing right now, customers do want that simplicity and being able to provide on an invoice a single price for everything they're doing. And then you have the finance teams that come and say, I want what is on the other side. I want the breakdown of everything for revenue recognition, for reporting, for analytics. I want to be able to tie back what services are being used, where usage events tie into, and what, attributes are being tracked against that. And I want the flexibility of being able to do both. And so what we often see when we work with Avalara is we can create bundles for all or parts of these elements, whether it's the SaaS and data storage, and then we leave the other two separate. If some of these things are optional, maybe the communication services is what we would call like an add-on to the bundle. That could have an a la carte price and gets included in. And on the invoice, we can still show the rolled up total for simplicity. But we need to be able to have the flexibility to price any way that the finance teams need for revenue recognition and tax decisioning. And we need to then take into consideration some of those additional rules, like what business entity is this service being offered through? What type of customer is it? Where are they located? And we often see with some of our customers, we have multiple bundles in play that are using the Avalara's bundling solution. And we look at all of those attributes to say, okay, we're going to price using this bundle. We're going to tax it this way. And we can send that detail into Avalara and get the right calculations back. And everyone can see all of the information when they need to on the tax filing and reporting side, as well as any of the analytics that they're running through Avalara software.
Well, you raise a really good point there with the involvement of the finance team in there, right? And this is something I see quite a bit is you'll have a tax team that'll spend a lot of time figuring out what they think is the right value for what they put in the bundle and the right proportions. But nobody ever asked the question of like, is that consistent with how you're recognizing the revenue on your ledger and on your books, right? And it's really important that those need to be, in harmony, right? If you are recognizing it one way for accounting purposes and another way for tax purposes, that's generally going to not fly in the long run, so you do need to make sure that all that's consistent one way or the other.
And we can throw one more wrench into that too, is the sales teams who want to be able to discount and price however they want. And again, it all has to line back up with those revenue recognition rules. So they're not saying like, yeah, the SaaS is free because it has all the communications tags. Right. And we'll just do that. Like you can't break those same rules. You need to be able to flow that quoting all the way down through the financial model and make sure you're reporting everything properly.
Yeah. Well, and you mentioned that word free. That's the word of caution there is that your parents probably taught you at some point that nothing in life is free, and that's definitely an operative word when it comes to bundles, right? And there's certain industries that have maybe a bad habit. I'm looking at you wireless folks. Free unlimited talk, free unlimited text. Free unlimited data. What they mean when they say free there is at no price beyond the amount that you're paying us for those services, right? Can't walk up to the store and say I want the free talk. You're going to have to buy the package that includes it, and so you do usually need to have some value associated with that.
Exactly.
Okay, so we've talked about why it's hard. Kind of pivot a little bit into how you can make sure that you are prepared for this, right? And how do you make sure that you're, set up for that? So if you have this has resonated with you, maybe you are in an industry vertical where you're moving into contacts for the first time, or you're having to worry about some of this stuff for the first time. What can you do to try and make sure that you're set up for that? Well, first and foremost is make sure that you have some help, right? Don't try and just learn it all on your own. If you need to engage with, somebody who works on the advisory side who can kind of steer you through that, that's great. If you're going to, get involved with doing, some automation solutions, maybe you're going to need to get new, billing and tax engine, make sure that you've engaged and done your due diligence and researching that you're finding solutions that work for that. Make sure that you're, whatever solution you wind up with, that you're on top of the changes. This is something that does shift on a pretty dynamic basis. There's a lot of flux in the tax rates associated with this. We have some taxes in this space that changes often as quarterly, and so you've got to kind of be a little more on top of that. And then the biggest thing I too would caution is that inherently the companies that are in this space are generally technology related, which means that you're probably constantly adding new stuff. You're constantly adding new product offerings, new solutions, and that sort of thing. And so you got to stay on top of that too, right? If you're going to be constantly moving into new areas, new products, new technologies, you got to make sure that you're prepared to shift and put the bill on that. And then also make sure that your technology is prepared for that. And I think this is one that probably resonates with Chris quite a bit, is making sure that you've got automation solutions that can handle all of the directions that you might happen to diversify into, or where your technology development might go.
Yeah, especially might go. Think about what you might be implicated for in the future, and prepare for that so that you're not stuck having to change on a moment's notice when one of these regulatory bodies decides there's a new tax that affects you.
Absolutely. Okay.
All right. Let's move on to our third CPE poll question. Just a reminder, you do need to complete 3 of the 4 questions in order to qualify for the CPE credit for today. So the third poll question is, if you have a streaming service, which of these taxes are you likely to owe? Sales and use tax, communications services tax, amusement tax, utility tax, or all of the above? All right. While that is still up on your screen as a pop-up, I'll pass it back to Toby to continue with the presentation.
Yeah, so want to talk a little bit briefly about how this can be automated and how we can help, right? So we've talked a lot about why it's painful and why that's tricky, and what some of the pain points are. The good news is that there are some great automated, robust solutions out there in the market, things that have been around for years and tried and true in this space, and can kind of handle some of these tax complexities and make life a little bit easier for you, right? The nice thing with Avalara's communications platform, is natively in the cloud. So you've got a pretty easy implementation there. You've got all of the tax calculation needs with content. For not just all of the market verticals that we've been talking about, whether it's VoIP or video or technology-related products, the whole gamut of what might be out there, but also then in terms of global breadth as well. So a wide range of countries and markets that you might happen to wind up within. We can also handle your tax returns, your tax filing, and make sure that it's a simple solution for you to get up and going. Some brief highlights of stats of just how much stuff that we've handled here in the world of Avalara for communications. As you can see, some pretty big numbers in terms of numbers of taxes calculated and number of returns filed and that sort of thing. Comprehensive support, as I mentioned, for whether it's IoT or wireline and wireless communications, traditional phone services, streaming, cable television, managed service providers that may be dealing with other types of technology, CPaaS and SaaS, and hosting connectivity. I think LogicSense coverage is probably pretty similar in terms of the billing solutions that you guys have designed and intended to have solutions for.
Yeah, there's very much a lot of alignment there with Avalara, and when we look at the end-to-end solution that Toby just talked about, full integration capability to support all of AvaTax for communications features and functionality.
Yep. And just real briefly, what that looks like, right? So within the tax calculation lookup, we can handle your address validation, jurisdiction assignment. Through the calculation itself, it will determine, okay, what's taxable, where is it taxed, which taxes need to go back to the bill, and handle all that math and process it, send it back to the invoicing system, and then obviously keep the other important part of that, the record of everything that's taken place, so at the end of the compliance period, you have the tax data that you need to file and remit. And then a little bit about the returns processing. It's one thing to handle the calculation, but obviously these taxes have to get to the tax jurisdictions. And that can be a little bit messier than just sales tax alone filing, because we've got different types of agencies involved. We're sometimes filing to public utility commissions or local sheriff's offices. So there's different entities that we're having to handle different types of returns. The back office process around all of that can be a little bit of a different flavor than what people are typically used to with sales tax alone. So there's just kind of a quick overview of the flow of what the Avalara for Communications return process might look like. If you were interested in more information about that, we'd be happy to get it to you. And Regina.
Okay. Yeah, time for our final poll question. And that is, would you like to be contacted by an Avalara sales representative? Someone who's an expert in this area can reach out to you and talk you through some of the options that we have. I am going to move us on to Q&A now. We have a little bit of time left for Q&A, a couple minutes. So why don't I go to the first question that we have. If I use a third party like Twilio for communication services in my product offering, does that mean I don't need to worry about taxes for my customers?
So I think, Toby, this sounds a lot like the image you have of, say, the dentist office offering the whole suite of, reach out through SMS or send me a message or a phone call. So if a company was using a third party for that, do those rules still apply to them as being a material user of a communication service?
Yeah, I mean, I would tend to think the answer is maybe, right? That famous wishy-washy answer there, right? It kind of depends on how you're packaging. That was kind of where I was going with that conversation earlier, is that, if I am Uber in that illustration and I have implemented the ability to talk to the driver through text or API or that sort of thing, at the end of the day, I'm still selling a ride as my primary product, right? Or if I'm Domino's and I've implemented that into my pizza delivery app, I'm selling a pizza, right? The ability to talk to the driver is not really the true object of what I'm selling, which means that when I, Domino's Pizza or Uber or whoever, when I'm paying my Twilio bill or, whoever else might be providing the back-end API for that, I'm going to probably pay that as the consumer, right? I'm just using that as part of my furnished service. In contrast, if I'm the dentist office that we talked about, and I'm advertising that, the ability to text and talk to the patients and keep in touch with them and have contact with your customers is the core functionality of my platform and my solution, it's going to look a lot like I'm the reseller, right? And I'm reselling Twilio services, and the API communication is actually a key component of the offering to my buyers. In which case, yeah, I'm probably much more likely going to need to worry about those communications taxes. And so, short answer is it depends. I think you have to look at what your product is and how do those API communications fit within the wider market. Sometimes it's offered on I'd call out there, I didn't use this example, but one of the other things is sometimes it's offered as its own complete standalone module, right? So for example, you think about some of the big desktop type of platforms, things like Salesforce and Microsoft 360 and Adobe, a lot of these sort of productivity suite solutions nowadays have the ability that you can purchase a module that includes, calling or texting or team communications, that sort of thing. It's its own special price point on the market. And that really kind of blows it up, right? You're not going to be able to argue that this is not a inherent part of what it is that you're offering if it's its own, price item on the SKU. So, yeah.
All right, we have time for another question. My IoT devices only send alive messages via SMS in regions that don't support data. Does that still put me at risk for communications taxes?
Maybe, I guess would be the short answer on that. It's another maybe, and yet maybe that's a recurring theme. The tricky thing with the IoT connectivity is, the type of content, does it really constitute use of internet versus is it really private network data? And a live message certainly starts to look a lot like it might be just a private network communication as opposed to actual usage of the World Wide Web. There's a lot of controversy around some of that. I guess the flip side of it with that specific example would be that if you're in a place that doesn't have any data support and maybe is further off the beaten path, I guess you're potentially getting further away from taxing jurisdictions, but you can't really rely on that, right? You need to make sure you're prepared for the possibility that you may wind up within civilization at times and need to worry about tax.
All right, that's all the time we have for Q&A today. If you qualified for CPE credit, you can download your certificate now in the CPE Certificate Engagement tool. Your certificate will also be available in a post-event email that you'll receive within the next 24 hours. Also in the post-event email, you'll find a link back to this console to view the on-demand recording, slide deck, and the additional resources. Just a note on some of our upcoming webinars. Be sure to check them out at avalara.com/webinars. And then finally, our customer conference, Crush, is on tour this year. Check that out at events.avalara.com for details. Thanks so much for joining. That concludes today's webinar.